right.
Ready? Good morning. Welcome to Lisle, Illinois, here at AAIS. And we're going to be presenting today Blockchain Links to the Future. Thank you to our host at the AICP Mid-Atlantic chapter for asking us to present this webinar today. We're excited to present some of this information. I'm Robin Westcott, the General Counsel and Vice President of Government Affairs here at AAIS.
I'm Truman Esmond, Vice President, Solutions and Partnerships.
So we're delighted to be with you today, and we want to talk to you about blockchain and how we see that in the future of the insurance industry, and more specifically how we see that applying to insurance compliance professionals. First and foremost, I think we need to talk about why is AAIS doing this? So over the past 6 years, Truman and I have been part of the new team at AAIS that's really worked very hard at creating a new infrastructure within our company. And that infrastructure has hopefully will help modernize the insurance industry in general. We have been using things around data collection. As you all know, or maybe you don't know, advisory organizations were created to help companies to be able to share some data without violating antitrust laws, to assist regulators by creating filings that could be put in for one filing instead of multiple filings by company, just to create efficiencies. So what we see is that the modern infrastructure platform that we've created here at AAIS will assist in many of those ways to help bring those two things to a more modern age where data is greater efficiency, more transparent. So that's been the reason AAIS wants to be a leader in the blockchain technology around just how we help companies and how we help the industry in general move forward. So why should you care, right? Why would you be interested in blockchain as an insurance compliance professional? Well, one of the reasons that we can kind of touch on is that if you notice over the past several decades, you've had new technology come into your life. Whether it was a microwave, that was something that kind of came in, when we were kids, right? But it was years before everybody in your neighborhood had one, right? Mm-hmm. Same with some of the other technologies around fax machines, even going back all the way to electricity. It took years and years before the infrastructure was complete enough and people actually absorbed that and adopted that technology. Well, that's drastically changed for us. You can see from the graph, which doesn't even come to current, that many times now technology is being adopted at a much faster speed. One of the examples I love to give is around the smartphone. How quickly did you move from a flip phone to a smartphone? And that technology is less than a decade old. Yep. So the ability, did you ever dream growing up that you'd be able to do some of the things on your smartphone, that banking and your credit card activity, communications, all those things happening.
If you watch Star Trek, you dreamed that.
You did. Where's that replicator?
Tricorder, right.
So those are the reasons that you should be interested, because this technology is going to be in our industry. It's going to saturate the things that we do and affect the things that we do as insurance compliance professionals, but in general, the insurance industry as a whole and financial sectors that support our industry. So some of the goals that we have today, things that we want to accomplish, is obviously to introduce this technology to you, to really give you an understanding of the history of that, how it's kind of come into modern infrastructures within the financial sectors, other industries.
So the 101. Yeah.
Right. So we want to make sure that you understand like the infrastructure itself for a blockchain. We want to give you some use cases, some things that have happened already, some things that we think will happen, things that you've heard of like Bitcoin, explain a little bit about that. And then also just really try to get a handle on what's the potential for impact in our insurance industry. And more specifically, how will that also affect insurance compliance professionals and the jobs that we do. So we're going to have some very specific use cases around the regulatory compliance. And then what we hope is that you have questions that you can share with us at the end of this presentation or during the presentation.
There's a Q&A button at the bottom of your screen. You can click that and ask questions real time, and we'll try and address those either during or at the end.
Right. And then also during the webinar, there will also be some questions that will come up. And if you can, please try to answer those. Not mandatory, but we like to get some feedback on some of the interest level that we have around this technology. Again, AAIS really wants to be able to give information and be informative to our industry, to our members, to our affiliates, and to the P&C community and the life and health insurance community in general.
Right. Really help you understand the technology, make use of it, have the conversations, and discover what it could mean in your organization, in your unique position. So let's dive right into the technology. Blockchain is an important technology. It's definitely increasingly so, certainly more and more in the news. There's lots of mentions of blockchain on earnings calls and things like that around the industry. And it's really going to be very important and transformational to the industry and how we think of and use data. This out of the way real quick. The first poll, I believe, just popped up, so please go ahead and I'm going to go ahead and respond to that myself. Blockchain really is designed to give control over data assets to the owners of that data. So, I mean, very broadly speaking, we can think of that if we look at the first generation of the internet and the technology, we're given services for free that often provide some great value, but at the cost of the data that we're providing back to the providers in LinkedIn and Facebook and things like that. What blockchain enables us to do is actually flip that script. So all that data that you have as an individual, you can then control that and selectively release it back into the environment. So kind of flipping the tables on Facebook, where actually the network is the value, not you as the product. So we'll dig into that a little more deeply so you can see how that will impact. But really that's the fundamental purpose of blockchain, is to perform that disintermediation and get data, really activate data around the industry. I personally believe, and a lot of people have talked about the importance of blockchain relative to business. If you look at the internet and what that did for communication in terms of real-time communication, enabling functions like this, webinars like we have now, the internet was not designed for that, but it certainly enabled all kinds of communication. Blockchain could be that same sort of technology enabling business due to transactions, and again, being able to activate data and being able to seamlessly work together to perform a particular function or transaction. Obviously very important in the insurance industry. Bitcoin did this with banks, basically disintermediated banks when it came out. We'll go into a little bit of the history, but it removes the need for banks and gets rid of the things like float and bouncing checks and things like that. So the question becomes to us as the insurance industry, what's the transformative application of blockchain that's going to do that same sort of thing for insurance?
Right. There's some great opportunities, though, when we look at blockchain for our industry. It's the application of blockchain inside a regulatory environment really fits quite well. Mm-hmm. It does create a greater security around data, efficiency, the way we exchange data, actually creating a lot more openness around what we can share with each other, and accountability into that. Transparency, especially for our environment where we are regulated, and the regulatory environment begins to demand more and more access to insights into our insurance community.
What's really happening. So really the idea is that by eliminating or reducing the friction between industry players, particularly around regulators, really everybody's now start to working towards the same goals. Really, compliance and regulation have a purpose. Companies want that purpose for resiliency, for activation, innovation in the industry. And this is definitely going to be an enabling technology to allow us to take advantage of some of those new things that we can do, and hopefully get rid of some of the bottlenecks that we've had in our industry over the years.
So Truman, tell us what blockchain is and how it works.
Let me do that. So we'll dig into actually what the heck is blockchain itself. Fundamentally, it is a ledger. So we're all very familiar with ledgers, balance sheets, the transaction logs. Really, any kind of a log is a ledger. The difference in blockchain is actually what they call a distributed ledger. That's the core technology, distributed ledger technology. And the idea is that it's a shared ledger, so not a replicated ledger, as we see today, for example, with your bank account, where a bank's got a copy of your bank ledger and you have a copy of your bank ledger, and there's room for those to be out of sync. Transactions being delayed, payments, batching of daily receipts. But with a shared ledger where everybody's working off the same sheet of music, as it were, there's no possibility for that to be inaccurate. It also cannot be altered, and we'll talk about exactly why that is with the distributed ledger. So you always can look at that single source of truth in the history of what's going on in that information. So really today, when we look at the common definition of blockchain as it's evolved over the last few years, it's really a peer-to-peer distributed ledger forged by consensus, and we'll talk about some of these terms in here, with a system for smart contracts and other assistive technologies to take that ledger and activate it for a particular business case. Oops. Okay, so why do we even need blockchain in the first place? Currently, as I mentioned, considering a simple bank account, the transactions are far more complex than they need to be, and the intermediaries often facilitate more complexity than is required. So if you look at the network, everybody's got their own ledger, everything's happening out of sync, everybody's operating on different time zones and different systems, shuffling paper, dealing with different levels of technical advancement. Blockchain can help us solve that by providing a single ledger that everybody's working from, so a much cleaner organizational pattern where everybody is aware of all the interactions that everybody's doing on that particular ledger, whether again it's a checkbook or an inventory system or all those different kinds of ways that information could be changed on that common ledger. Really reducing the need for paper, speeding up transactions, again, no more batching, everything is going to be real time. And it enforces the rules of the business itself. So who has the authority to create those records, how those records get into the system, again, it all is controlled through the blockchain patterns.
So we're really talking about a single source of truth.
Yep. So the ledger itself is a relatively simple concept. And let's go through what makes it a distributed ledger and why that's so important to blockchain technology. So we said it is a single source of truth. Everyone has a copy of it, but those maintained through consensus so that they're always in sync. They can't be out of sync, and the system is going to be smart enough to essentially catch it if they are. Oh. There we go. The blockchain itself, the technology enabled it to be very resilient. So again, it can't be out of sync, it can't be changed, and it's very transparent. So everybody that can participate in that blockchain sees the information that's available. So in a public blockchain, everything is very transparent, so you know what's actually happening in there. So if you look at the models, that first transaction, A to B transacts $10, passes through the network, and all the other nodes across that network immediately see that transaction as it occurs in real time. To the degree that another node is trying to do a transaction at the same time, it's like recording a different transaction, and it becomes out of sync, the ecosystem immediately identifies that out of sync transaction, identifies that bad node, marks it as invalid so that it can no longer participate in the network and it's not feeding information back out. That node gets rebuilt from the current longest chain, and then it can go back and add that transaction onto the end. So it's a self-healing sort of system, and again, making sure that the information you're looking at and relying on it for your business transactions is always up to date and accurate.
Let's talk about the anatomy. So what does that really look like in practicality?
Right. So underneath the hood, and why blockchain is immutable and has those types of characteristics, there's a few things we need to talk about, that the different architectures of different types of blockchains, certainly relative to the ones that we've heard about in the news today, which are largely public blockchains or private blockchains. So we're going to see a lot more private blockchains. You're certainly hearing about them in the news, but it's a very clear distinction, or a very important distinction, versus a public system. You can even think of it as a public bathroom versus a private bathroom. Private bathroom is generally a little nicer, and a little better facility,
A little cleaner.
Public bathrooms are purely functional, for example, but they're very different, and we'll talk a bit more about that and what that means to the system, in addition to just purely the access. But digging into the actual anatomy of what happens as transactions are recorded, those are recorded to a ledger in the form of blocks. So you can have multiple transactions recorded by a point of sale, for example, grouped into a block, and then added to a blockchain. The first block is called the Genesis block, or block 0, as we see in our little model here. And then as the next blocks are created, the block before it is a hash is created, which is basically a cryptographic signature or thumbprint that is related to the data that's already in the system. So based on its time, the data that's in there, who created that block, that all creates a very unique signature of that block that's incorporated into the second one. So that's the chain that immutably changes. So that second block, when somebody says, oh, I want another block to create, we got more data coming into the system, it's going to incorporate the hash of the previous block as part of its existence. And then through consensus, the blockchain network allows that block to be created and added to the chain. So you add it to the distributed ledger through consensus that the system uses to create another block in the ledger. And those continually be created with, again, each subsequent block using the thumbprint or hash of the prior block to make sure that they're chained together. As a result, those cannot be altered. It's a persistent trail. So again, going back to compliance and regulatory functions, auditability here is key. You know exactly what happened. And again, like a ledger, it's write only. So think about that relative to a database. You're only adding information. You can add corrected information, but you're never going to change history. So it's good to understand that from the beginning. So in this case, we've got a blockchain with a few blocks on it. But what if somebody wanted to change history, wanted to go back and say, no, I actually have more Bitcoin than it says here, and change what that transaction was? Instead of giving me 100, you gave me 1,000. If somebody wanted to do that, what actually happens is they would propose on their own node a separate block with some different information into it. But if they tried to insert that block into the chain, that would change the signature for all the subsequent blocks, rendering each of those blocks afterwards invalid. So the system will also note then that blockchain, that node has an invalid blockchain, and immediately is eliminated from the system. So again, that's the way it can keep the audit trail, the accuracy of the information, and the immutability of that data over time. Let's dig a little further into the anatomy as well. So now we've got those blocks of data in the blockchain. How do we make use of those? How do we get them in there in the first place? That's where smart contracts come in. So smart contracts operate in an encrypted virtual machine. So just like the data itself, it's living in an environment that everybody has a copy of. Everybody has a copy of that software application that performs the function of the business contract or the business transaction in that encrypted virtual machine. So that contract cannot be changed without consensus of the nodes. So if we have an agreement of what that transaction is supposed to do across the blockchain network, we all have a clear understanding of that, and we're performing that transaction. If, as a governance body, we determine that transaction needs to change somehow, incorporating some new information or new players as part of that stakeholder, that transaction, everybody has to agree, or at least go through the consensus mechanism to agree that that transaction is now changed. And then the nodes can selectively participate in that smart contract if they so choose.
I like to think about if there are any gamers out there, but I'm sure we all have kids that are gamers. Used to, the kids would sit down in front of the game and they play alone, right? Now they're playing on networks, right, where they're interacting with other people, right? Does it mean that
multiplayer?
Exactly. Does it mean that if people can see every person that's playing, they don't know exactly, right? And so there's information that's shared in that virtual world, right? That otherwise, we wouldn't have that kind of communication. And blockchain really just enables that. It's that virtual piece to sharing data and information.
Right. So when you've got a clear network like that really requires agreement ahead of time of what's going on in that business, you can see how governance becomes a very critical factor in that. We have to agree on the terms of how we're going to do business before we actually do business, and that's where the trust and the trustless transaction comes into play. We'll talk a little bit more about that. But governance is really key in terms of determining what information is in the blockchain, what smart contracts are around it, adding details, creating reports, adding new members, controlling participation. How do people join that blockchain, leave that blockchain? What are the rules around the data that's in there? And you said like a multiplayer online game or a fax machine, it's really maintained and adds value by increased participation. Right? So you look at Bitcoin. If there's only one person that had all the Bitcoin, it wouldn't be terribly valuable. But or a fax machine, it doesn't. You have to have somebody to fax. You have to have somebody to interact with using the technology. So that's kind of the breakdown of blockchain as a technology. So starting with the ledger, it's that log of activity that's distributed, so everybody has a copy. The blocks are the data inside the ledger that are keyed to each other using a thumbprint or a hash of the prior chain, or the prior block, so that the chain becomes immutable. And then new blocks are added by consensus, which we'll talk about in just a second. And smart contracts allow that information to be used by different nodes in the network or perform different functions around it.
People should also think about when we're talking about ledger, we aren't necessarily talking about numbers, right, Truman? There's all kinds of data that you can consider in the ledger system.
Yep, absolutely. It's a log. If you look at technology, ledgers of transactions, ledgers of systems access, in all kinds of applications, in health, in health insurance. We'll talk about that in a minute, the electronic records and being able to protect that. So lots of great examples of information that's happening over time, around the policy or claim. Is it changing through the endorsements? Who's participating in a different transaction, providing information about a claim or adjustment, what's the weather happening that day. All that information can be decorated around a particular object in a blockchain in a secure and auditable way.
Now that's really affected by whether it's a public or private blockchain. So you're going to talk a little bit about that.
Yep. So the consensus is really the governance mechanism to determine who can play with that blockchain, or to the degree that it may be compromised by different players in the blockchain. The consensus mechanism is the potential weak point, or the why it works and how somebody could potentially monopolize that network. And they're very different between public networks and private or permissioned networks, much like your intranet versus a public website, very similar. In public networks, certainly with Bitcoin and some of the more popular ones, use a proof of work mechanism, and that is the tantamount to trying all your keys on a door and then finally finding the one that opens it. As a result of your being able to open that door, or in the case of Bitcoin, you're mining it to find that next logical Bitcoin. You own that by virtue of proving you've done the work because you unlock the door. The next person that tries that has to incorporate your new Bitcoin into their next equation. So the idea is literally doing a whole bunch of math to figure out what the next logical Bitcoin is in the sequence based on the last one and the last transaction that was in the system. So you can see with all the transactions happening, mining is actually constantly a moving target, essentially. So it's a very difficult process to accommodate, and a lot of work, and increasingly a lot of work, as there's more and more nodes in the system and more transactions in the network. Another way to do it is proof of stake. So this is kind of like how many shares of a company you have determines how much influence you have over that company. The same idea applies in a public network for blockchain. If you have more nodes or more tokens in that network, you therefore have more influence over how that blockchain is governed. And specifically, if you have more nodes, so if Robin has 100 and I have 50, and another node wants to create a block, Robin would authorize twice the number of blocks as I would, because she has twice the stake in the network as possible. And again, going back to the participation, adding value to it, the blockchain networks, there's an incentive of people in the blockchain to bring more people into it, because it adds more value just by the stake they have in the system itself.
Now we see it very differently kind of coming into the insurance industry.
Very differently. So when we start talking about business systems, particularly that have more flexibility or more explicit governance that exists today, you start to get into the realm of permissioned and private networks or private blockchains. So these some different mechanisms for that, purely around solving some of the issues that we see in Bitcoin and some of the public networks that we'll talk about in just a second. But simply proof of elapsed time. So again, fastest wins. A kind of archaic one called simplified by Byzantine fault tolerance, where there's essentially validating entities, and then as more and more nodes accept that new block is valid, that creates a center of gravity and basically a level that is now trusted by the blockchain, and that becomes the new block, and that again is helpful for speed. And maybe again in a regulatory compliance environment, we might have a proof of authority. So different nodes, for example, a regulator node might have more authority to approve a new agent in a state or approve a new company in a state, whereas a company would might prove or have authority over the data they submit as being accurate. So different nodes of different roles in a blockchain, in a private blockchain, would provide the authority over the data they have authority over. So what I call the robots inside smart contracts, while they can be executed or thought of as contracts, immutable things to do, it's really software language and really a distributed application inside the blockchain itself, inside that encrypted virtual machine. Ethereum, when they created the concept of smart contracts, they shortened it to dApps, or distributed apps. Again, much like software around data, smart contracts essentially do the same thing, allowing interaction with that blockchain to create new objects, to add additional data, define the rules around different types of transactions. You may have subsequent contracts that are executed in sequence. Once this one says yes, then do this. All kinds of new features. And then depending on your role in the blockchain, again, in a private or permission network, you have the ability to execute or one or more of those contracts in order to interact with the data. It may be read-only, it may be creating new blocks.
So the smart contracts are really is what allows you to use this data. It doesn't mean that I'm giving you my data.
Correct.
It just means that I'm allowing a certain amount of access to my data to answer a question potentially.
Correct. Right. So again, the smart contracts, because they're executed, in the dark, if you will, or kind of behind the curtains, that can perform logic on data that you can't see and answer a question, for you, rather than giving you the raw data and then forcing you to scour through that data and answer the question that you have, which if you were to do it 2 or 3 times, may be done, you may get 2 or 3 different answers. Where in the blockchain, that smart contract is always going to ask that question the same way. The only thing that's changing under the hood is the data. So you can rely on an answer being consistent, even if the answer is different. It's as a result of the data changing underneath the hood. So one of the examples we use, and we'll probably touch on it again, is the credit score. Today, if you apply for a mortgage loan, they'll run a credit report on you, which gives the mortgage company a whole bunch more information than they need, when they really just want to know if you're over a 720, so they can issue the information. But they have to go through all the information in your credit score, as well as hold on to that personally identifiable information that they may not want to have. They just want to know, are you over a 720 today? And they want to know tomorrow. But if it's $20 and they get all that information that they have to hang on to, they're only going to do it once a year. Whereas they could do it, for example, in this way, they don't have to do a credit, pull your credit every day. They can just ask every day if you're still over a 720, and maybe it's not to accept you on the loan, but to change your interest rate potentially. So that's one example.
Right. And we can see where the regulatory environment would have a great deal of interest in how those smart contracts are executed within the system,
right,
because there is the potential to do some bad things.
Sure. But that's the transparency and the election of participating in a smart contract as the node. So they don't, even if a smart contract is created, you are not inherently, depending on the governance of the network, you are not inherently required to transact in that. You get to elect it, that you can participate in that, or maybe a slightly different one to perform the same business function in a slightly different way. But again, transparently and accountable.
But think about the smart contracts in the terms of audits, where right now we get a great deal of information that auditors have to compile and look at. What we're talking about here is that at least the first level of an audit could really be around asking questions of the data that's in the blockchain itself. So the dashboard for regulator and for the company to see where their performance is really showing what the result of that is, without giving access to the actual data in and of itself.
Right. So this is really going to unlock some power in the insurance industry. We'll talk about some of the specific use cases there. Some examples. One of the things we talked about, or you've certainly heard examples of it, as parametric products, where an insurance product that would auto pay, essentially you'd give you a payout based on the amount of rain that you had in that location. So the blockchain would be watching the weather essentially for those different nodes, and as it sees a particular weather station recording more than that 3 inch in an hour limit, it would immediately pay out policies that would be impacted in the scope or the proximity of that particular weather station. On the parametric side,
Yeah, another one would be the episodic coverage. In other words, it would allow for coverages to be activated and deactivated at the request of the insured. You had a great one. You like to go off-roading with your Jeep.
Right. So it would detect based, I know my coverage ends at the pavement, so it would detect as soon as I've left the pavement, not giving my geolocation to the insurance company or to a third party, but it would be watching for my geolocation to basically violate the fence. I've left covered area, it looks like I'm going off road, and it sees that I'm at a trailhead. It could offer me coverage for until I get back on the road, or for 24 hours. And then I could note that when I accept that coverage, it notes that I move 100 feet, so it knows I'm not already off the side of the hill, and then can, again, issue that coverage. And then as soon as I hit back on the road, it says, fantastic, you were off road for 8.5 hours, here's your bill.
Some things that we haven't traditionally used in the industry, we could start to look at developing new coverages, which means we'll be reporting and doing different things.
Yep. So again, back to the governance, control, and transparency. So it's really a big difference in how that blockchain is going to be governed. And that's why you'll see a lot of activity around blockchain today. But the manifesting that into a real business transaction really requires a lot of upfront agreement, which is why we're seeing some of the limited applications to this point, or at least relatively slow growth of some of these new initiatives.
Very careful. Hard
Very
to
careful.
get a bunch of folks in the same room to agree on anything. If you've been to an NAIC meeting, you know what I'm talking about.
So again, is it public? Is it permissioned? Is it exclusively private and no one else outside can connect to it? What's the consensus algorithm? Who's going to provide that operational control? And then who are the members? Who's actually contributing to the system? Is it everybody? Is it just certain people? What are the smart contracts, and how are you going to execute that, the virtual machine to create those permissions and actions? And thinking about the purpose of that network from its beginning, is that aligned with what it is that you're trying to do? It's very important to make sure that your participation in the blockchain network is doing what you want to do and is managed by the governance entities that exist. Certainly in our environment, those are already present and defined.
Right. Transparency and trust are key, and we really have to look at this in terms of how that changes what we do from a perspective of a compliance professional to the regulatory environment and within the environment and insurance ecosystem itself.
Yep. So, and again, the key is transparency and participation. Again, it's not, if a tree falls in the forest and nobody's there to hear it, it probably did fall, but it doesn't matter. You can't chop it up. So a little bit of the history and the mystery of evolution. This, again, has probably made some more good cocktail conversations, but it is a lot of fun. It may have actually been introduced from Men in Black. So certainly folks have heard about Bitcoin as the first public blockchain application. So Bitcoin is blockchain, but not all blockchain is Bitcoin. So
I like to explain it as it's a nice little car on the superhighway of blockchain.
Yep, it's a very specific application. One way to do it for a particular purpose, and in that case was disintermediating banks and getting around the financial crisis. It's got a relatively short history from some of our technologies, but not that old. It's been around for 10 years now, blockchain itself, for the initial white paper, kind of some of the fun stuff around it. So the blockchain, or Bitcoin, was created, and that first white paper was created by an unknown human named Satoshi Nakamoto, which you can see, again, because it's blockchain, you can see all the history that user has provided or activity in the Bitcoin blockchain since the very beginning. So you can see there's the address for the Genesis block. You can download the Bitcoin white paper to see how it was actually created. It's a relatively short read. I definitely encourage it. And then, but nobody knows who Satoshi Nakamoto really is in real life. Mm-hmm. Bitcoin was launched the following year after that white paper was created. And as we said, Bitcoin is just one application of blockchain, like email is one application of the internet. So kind of, again, some more cocktail talk. So at the end of last year, Satoshi, because we know how much Bitcoin Satoshi has, because we know that user's address or that node's address, had about 1.15 million Bitcoins. Kind of give you some idea.
Show what he has now.
Yeah. So kind of put that in context. On a couple of months ago, one Bitcoin was just shy of $8,000. I think it's around a little over $6 right now. So that means Satoshi had $9.13 billion. The end of last year, it was up near 20,000. 23 billion. That put him 37th between Paul Allen and George Soros.
Okay, Satoshi, if you're listening, give me a call.
Yeah. So when it hits 60,000, there's no reason it wouldn't do that. That would make Satoshi the richest person in the world. The funny thing is, while he's not actively transacting or mining Bitcoin, assuming it's a he, people are giving him tips. So he's actually getting more money all the time, even without doing anything, just as providing the benefit of the network. So
yeah, Truman and I discussed actually setting up a Bitcoin so you can tip us.
Yeah,
after,
we're
after
working
this
on that.
presentation.
We'll send out a follow-up email where you can we'll send you our Bitcoin nodes so that you can tip us via Bitcoin. So some of the challenges with that first generation of blockchain, it really is just one use. Again, Bitcoin is a purpose-driven application. It does the one thing. You can do some things with it, but it's really designed around the exchange of a currency. You have to mine Bitcoin. It takes a lot of processing power, and it's increasingly tough to do as an individual human. Back when it was relatively small in terms of the network participation, the Bitcoins weren't being created too fast such that you could do it with a relatively straightforward home system. Today, government entities, we know China, certainly the United States, major corporations are throwing piles of resources to mine Bitcoin in order to do the best they can to corner that market and get as much of that new currency as possible. So it's difficult to do as a single person without a lot of investment, both in hardware and power. because of the high volume, because of the speed required for high volume transactions, the need for consensus, and that the movement of that data can be challenging, as we mentioned in the previous example, with some, two companies or two nodes are trying to create a transaction at the same time. If it takes a while for that transaction to propagate across the network, you may see transaction failures. So you may have to go back and resubmit. So the time for that transaction to be approved by the blockchain is not as consistent as we would like it for those high volume transactions. Again, early on in Bitcoin, if you had, a nation state level of computing power early, you could create your own consensus simply by creating more nodes that are in the system, and you could then become the authorization node by controlling more nodes that are in the public. Right. Kind of like owning the ballot boxes, sort of thing.
Right. Well, we all see that in this kind of a situation that the need for regulatory intervention is probably imminent.
Yeah.
I mean, what we're talking about is a new currency, new security, new futures, because that's sort of what you're buying is futures.
And we'll talk about that in just a second, all the different currencies that are going around, because that's certainly the activity and what people are hearing. But Bitcoin is a public blockchain, so the rules are fairly set. There are some forks or changes of Bitcoin to accommodate some different data structures or logical weaknesses in the initial design, but the rules are set. It's difficult to change because of the public nature of that blockchain. We've also seen some called the questioning of the trust of Bitcoin because of some high-value ecosystem hacks. Exchanges, so the intermediaries around Bitcoin, those have been hacked. Some of the software used to interact with it have been hacked. Different client systems, if you lose your car keys, somebody else gets your car. That's kind of the idea. It doesn't mean that wasn't the car's fault, and the key worked just fine. So unlike in banks, Bitcoin suffers from the activity around the ecosystem. So, for example, the value of the dollar doesn't go down every time a bank is robbed. But in Bitcoin, that's pretty much exactly what happens. If somebody, some wallet gets hacked or some of the ecosystem gets hacked, the Bitcoin value drops commensurately purely because of the faith in the system underlying it.
Right, but the blockchain did not get hacked.
No, Bitcoin has not itself been hacked. You have the ledger that stores your Bitcoin, my Bitcoin, everybody's has not itself been hacked. Now, people lose their keys all the time, so there may be Bitcoin that are out there that somebody owns that they'll never be able to recover again. That's what happens when you lose your key. So some of the things that are also challenging to it, it's because it's encryption based, and in mining, it's really all about how fast you can perform math. The processing power is really the key determining factor about how strong the blockchain is and how people can potentially manipulate it or change it. So as we get into the next generation of computing like quantum, it's a possibility that it could break that encryption just purely by processing power, but similarly the network would be expected to fork and use the higher level of encryption that the speed, as we get to that level of speed in systems. So right. They'll work together.
Yeah, so it's important to understand the genesis, which really the first exposure and the first networks were really designed in this Bitcoin. But there's a next level, right, Truman?
Yep, absolutely. So that was what we call kind of 1.0. It was the first one out there. 2.0 is Ethereum. That is also shows up in the form of a token, or a coin, the Ethereum coin. Came out in 2013. It is a public blockchain platform, much like Bitcoin. Everybody can play in it. And also, like with Bitcoin, the source to create the blockchain platform itself is open source. So you can see, if you really like looking at code, you can see exactly the math it's using for the encryption functions. You can see the logic that's built into the system, and you can take that source code and deploy your own version of Ethereum. So Robin coin and Truman coin. So people are. The coin that it uses is called Ether. So much like Bitcoin, it requires Ether to, Bitcoin requires Bitcoin to play. You're either mining and creating one, or you're exchanging it. So you have to have something to exchange in order to participate. Ethereum's the same way. It requires Ether to perform exchange, or you're mining Ether such that you can perform those transactions.
But it added something, right?
It did. So the smart contracts were created through the Ethereum platform because it created the encrypted virtual machine. So Bitcoin had smart contracts in that you can mine, you can trade, but that's pretty much it. There's not much else you can do with it. Ethereum allows you to define your own smart contracts based on the data in the blockchain and perform actions around that. So you can get much more complex logic. You can incorporate data from third-party systems. those kinds of things, and create those rules. And again, who determines what those rules are? And the smart contracts are up to the governance of that system. So, and with Ethereum, the model of participation is there, but you can define, since it's your world, your coin you just created, you can define the governance model for it. And again, distributed applications in there. And as a result of the collection of smart contracts that you create, you may actually have what they call a DAO, or distributed autonomous organization. You know, we live in a country with rules and governance rules. If you defined all of those rules and how everybody has to obey them and participate in them and execute them, you could conceivably have a completely blockchain-based government, and then everybody would vote with their tokens, essentially. So Ethereum is currently the de facto public blockchain, and I'm sure you've heard all of the initial coin offerings, or ICOs, that are out there, and we'll talk a little bit about that. Everybody wants to mint their own money. Why not, right? Anybody can create their own cryptocurrency, so a lot of people are. Unlike Bitcoin, which is everywhere, and was early on, and again really had no home. They can't go out and arrest Satoshi Nakamoto if they wanted to, because nobody knows who he or she is. These new ICOs that are coming out have some center of gravity, whether it's an individual starting the company, or somebody cashing the checks for those token investments, those kinds of things. So there's probably a throat somewhere that could be grabbed.
Right.
So that's where some of these new security laws are coming out. There's thousands of these new coins. You can check out the ICO alert. The summary of last year, there was 913 ICOs in 17. Just about half of them were called a success, and that they raised money on average about $12.7 million. So not too bad. So far this year, just the first few months of data that we have, was about 1.1 billion this year. So we're certainly on track to see some more successes over the course of this year. And people are creating these currencies, these token exchanges, for any particular use, or really even none at all, potentially. A couple that, some examples, and again, you can certainly find hundreds, if not thousands, out there. There's a Budbo for the cannabis supply chain, tracking cannabis, the seed to sale process. There's one that I like, that was one called Eat Me Coin, basically restaurant loyalty. So every time you eat a pizza or a sandwich or a burrito, that activity would be logged in the blockchain, and your loyalty would be able to span across different businesses and networks.
My son could own a Chick-fil-A franchise.
Totally could. Yep, Chick-fil-A blockchain. And then one of my favorite ones is the UE token, what they call the useless Ethereum token. So this is a great example of what's happening in the ICO space right now. I would definitely check it out if you like. I particularly like the logo. I'm not going to call it out more than that. But it's the first honest Ethereum ICO. It's just basically somebody selling tokens that you can buy, and that person's going to probably go buy some televisions. Give you an idea, this person was able to earn $232,000
for absolutely nothing.
For absolutely nothing, and right there saying, and even thanking people for doing that. Couldn't believe it. He says, "Don't buy it," but people did. And that's kind of what's happening in the ICO market, the coin market right now, which is not giving the technology a lot of credibility when people are buying these things that are legitimately useless, but they're doing it because it's based on the technology. It's kind of the early .com days. Give you an idea what's happening around the world.
Yeah, I think that, we're putting some of these slides up, but we probably need to move on into the use cases. Yeah. But what we want to say is be very cautious when you're looking at Bitcoin, because you might be buying something that is really actually nothing. Right.
A lot of hype, a lot of money, and very little substance so far.
Right. So let's start talking about what's out there right now in the insurance industry.
Where we're going.
Yeah, where we're going.
So where we're going as an industry, again, moving into those private and specialty blockchains. So we're moving out of 1 and 2.0 and into 3.0, where there's specialized business platforms. Hyperledger, which is created by IBM and is now managed through the Linux Foundation. So like Linux and Apache and some of those other technologies. So very open governance. And then Corda, which is from R3, another consortium of industry players globally, reinsurers, large insurers, to create another platform that's really around individual contracts. And we'll talk about these in just a second. These are all permissioned or private systems, and they're increasingly mainstream. Again, you can take these programs, pick them up, and drop them into your IBM cloud or your Amazon cloud or your Microsoft cloud, as we've seen some examples, and really get started up and running, and then figure out how you're going to take this car around the road. And privacy, as you mentioned, the private blockchains can eliminate a lot of the challenges that we see in those public platforms. I mean, obviously, the scalability, the weight, the ability to permit access, The governance can be defined, explicitly by, current intermediary or the regulations that exist. So there's a lot of different ways that it can go.
Let's move in now to what that means in our insurance industry. And it's easier to start with some outside the industry types of examples, because we think that will help open your mind into how this really could work inside an insurance industry.
Mm-hmm.
So one of the first things that I saw that I was very interested in is here in Cook County, the Recorder of Deeds has actually established a blockchain. Well, what's one of the oldest ledger systems we have in our country? It's really around land, actually in Florida, we had, when I worked in the clerk's office, we had deeds of record that went back to the Spanish land grants. So what a perfect opportunity. Now that could mean some very interesting things for title insurance, because if you can chain title without having a human do it, and it is a trusted, immutable source of truth,
you don't need insurance for something that's known.
Potentially.
Right. Some other examples, voting. Earlier this year, in May, West Virginia had the first federal blockchain-based election held in the primaries this year. So again, coming back to Chicago, it's probably not something Chicago is going to take on right away, because dead people won't be able to vote if that's all in the blockchain. So we want to see what's going on there.
Other areas,
laugh track, studio audience.
Other areas, property certificates. The diamond industry has actually implemented this on authentication and certification of diamonds.
Mm-hmm.
Other areas in the supply chain, like food safety.
Yep. Blockchain cows.
Exactly, blockchain cows. And we've also seen situations, for example, Chipotle might have been real interested if there were a blockchain around some of their supply to figure out what was going on in their system.
Still not buying romaine lettuce.
Still not buying romaine lettuce. They probably could have used that as well. And then a resurrection of an old company that we really love.
Yep. I'm sorry, I got another poll. Got to get that out of the way. So
around intellectual property rights.
So Kodak, in a bit of a resurgence. They are still around, believe it or not. They've created a blockchain for photographers, allowing them to register the intellectual property rights. It's basically establishing the first record of the copyright for an image they create, and then a business ecosystem around them licensing the rights to that photo, kind of the iStock photo model. But again, asserting that they've got the copyright to that image and being able to accurately determine if that image is being used somewhere else based on the cryptography that identifies that as a unique photo. So really some cool things there. So we get into the insurance operations itself. There's a ton of different ways that blockchain can impact how we do our business today, just bringing it out there.
Right. Out and beyond the actual compliance functions, market and lead generation, in other words, how we interact with our customer, quoting, bonding, issuing policies could be in a blockchain scenario. Underwriting, you can see the power of being able to execute smart contracts around what exactly it is we're understanding our risk.
Yep, and grabbing additional data that you can trust from sources and having that available, both right now and bringing that into a trusted service, but then knowing what happened later on. You can go back and see what data was available at the time.
Right. Fraud detection, I also think, is one of the huge ways that our industry could be impacted. I think the potential savings around being able to look at transactions from a fraud perspective. Right now, you report your SVU units will report fraud to the departments, and there's still it's still difficult for that to be put together in a comprehensive way. But inside a blockchain, fraud could be detected very easily.
Right, and it would be impossible to do, for example, if you're a small insurer and you're being potentially selected against or targeted, or somebody's committing fraud against multiple small insurers. Again, without blockchain being able to see the activity across different companies, that may go undetected.
Right. So what's real right now? Let's look at that from who's actually doing blockchain in our industry.
Well, there's a variety of emerging use cases. Certainly what we're doing in the industry right now is forming consortia and establishing some of the rules about using blockchain for different aspects of the business and different use cases. What we're seeing right now are some islands of success. So usually driven by a founder-led network, as we talked about, because of the ability to establish governance and control right away. But so they're inside companies or groups of companies as pilot organizations. I know a couple of them have actually gone public, or at least gone in production, I should say, like IBM's international contracting, and some of the the international ones, and actually the country organizations that are using it, like Estonia, using partnering with guard time for electronic medical records and actually incorporating genetic data to your medical profile.
Right. And we see Nationwide has a proof of insurance that has kind of risen up inside of the risk block consortium out of the institute.
Yep, that was their first use case there, which is, again, very valuable and could potentially complement the Marsh initiative for proof of insurance as well.
Right. We also see the first kind of interactive was around the marine hull insurance with a consortium of Maersk and Microsoft and other entities. So that's really talking about, how those shipments are moving in transit.
Yep. So we're not quite there as far as having those fully automatic transactions between untrusted parties across, dramatically different industry segments, but we're getting there. So these little pockets of success that will start to come together. Maybe a good point right now is to identify that there's not going to be one blockchain. There's going to be lots of little blockchains interacting with each other depending on the rules of those systems. There'll be bigger ones and aggregators, but there'll be lots of them. So don't consider it like there's one internet. There's going to be lots of different ways to participate.
One of the things that we really have to look at, though, is how this really affects us from a policyholder experience, right? It's going to change how we interact with our policyholder. And quite honestly, the better we do our business with our policyholders, you can see from this slide, the better we do as companies.
Right. That's probably one of the biggest criticisms that we hear in the industry is the ability to provide the experience that they're finding today, whether they're going to Chick-fil-A or they're buying something on Amazon or managing their personal lives through their phones or their business lives through their phones or other systems. Insurance has been a bit of a limiter to that because of the regulatory environment. And this blockchain will enable us to provide a much tighter experience, allowing for greater innovation, allowing for better use in insurance and risk management and mitigation of that data that would have historically been private. I'm not going to give you my financial information or tell you exactly where I am. But if that information is available to a blockchain such that it could be leveraged to provide a mitigation value or settle a claim or do an underwriting process, those types of functions are going to happen. And that's really going to change the policyholder experience and really flip the switch and enable insurance companies and regulators to partner with policyholders to really provide the optimal benefit of insurance, right? And again, which brings us between the quote and the claim. It's no longer purely a financial transaction, but becomes a service transaction. As we are better able to mitigate risk and become less dependent on data, we're going to be more dependent on service and relationships.
Right. One of the things that we also should take a look at, let's skip to our potential applications for compliance professionals, because this is something you guys are going to care about. So keep going.
Oh, one more.
Yeah, one more. There we go. So what are some things that you can see in affecting, the areas within the things that the compliance professional will face? Well, financial reporting. I mean, my end game, I hope I see this before I retire, is that instead of the yellow book and even the reporting system we have now through the centralized AAIS, if you have financial reporting on a blockchain, many of the activities around the analysis that's done inside the regulatory community, and even from a perspective of the dynamics and the analytics around where you're positioned individually as a company versus all the other companies participating in the blockchain, could be profound, right? We're taking a lot of cost, a lot of frictional cost out of the system around audits and really trying to understand that information. We're creating really kind of a view that
essentially real time.
Right, that really at that point people could concentrate on what's the outlier. Why is this different than the other things? The ability to make that comparison and move forward. Audit activities, again, would be highly, the activation and coordination for professionals would be changed, because we'd be looking at different things. We'd be understanding the information, the vast amount of information we have a lot better. Filings will look different, how we file our product, new products, and how they come into the marketplace, as well as data reporting and how the industry is responsive to the data calls and the need of the regulatory environment to understand the insurance, infrastructure and ecosystem itself.
So one of the things coming out of as we get close to wrapping up here, what should you do with this information? Hopefully, as you take it to your own organizations. Hopefully, this provide a bit of an introduction about the technology, so you can see and understand how it can be applied to your space, or understand how it is being applied to your work, and really get prepared to participate. The key to that is knowing your data, how you're getting that data, where it's coming from, what those streams are, and then the value that you provide in your organization, be it a regulator or a company or a department inside of a larger organization, is understanding what that is and then seeing how the technology would apply to you.
So, as we wrap this up, we really want to see, we hope that everyone was able to really understand what is blockchain, what does it look like, how is it structured, the history of that. Basically, we also want to make sure that, you guys have some ideas around how this will be implemented within your industry, and more specifically within your jobs and the things that you do every day inside your company.
So, and then hopefully we've got a good understanding of what's going on inside the blockchain, and understanding the anatomy of the distributed ledger, the blocks, how it's chained, and what makes that an immutable chain, the difference between public and private blockchains, and some of the consensus mechanisms that make them unique, and how those influence the governance, and then the smart contracts and how the blockchain is leveraged. Really understanding, one of the key points understanding is that it's a ledger. It's not a database, it's a ledger. And that has some unique architectural implications, and something to think about then.
Let's take some of the, we had some questions, and I want to make sure we hit on these because I think some of these are very important. We had one viewer that wanted to really to explain a little bit more about security.
So the security, again, if you look at a public network like Bitcoin, the security is in the work itself, right? It's public, so everybody's there and you can see their handles, but you don't necessarily know who that is, and certainly you can have multiples.
Well, let's talk about it from a perspective of an insurance environment.
Right. So in an insurance environment, and how it will really work, and how it's working, for example, when you look at the Corda and Hyperledger, is that you actually have a network of different blockchains that allow specific access only by the players in that contract space, whether that professional relationship or as a role based on a regulatory body. So there's also ways to take information and relate it in a blockchain, but keep the information outside the blockchain, so the data itself is not necessarily visible, but you're using pointers and access tools to relate it to data that you can trust, even if the data itself isn't stored in the blockchain. So there's lots of different ways to do that. But really the key is, again, not about distributing data or copying data so that could get out of control or out of sync, but being able to ask the question of that data reliably and consistently.
One of the questions really was around the legislation and some of the other activity we'll see around trying to regulate smart contracts and blockchain activity. We've seen a flurry of that as compliance professionals around the country. I think that at its core in the smart contract and the execution of a smart contract, some of the foundations already been laid with e-signature. And so there probably is going to be some evolution of that, to accommodate. Really, it's probably the more of the regulatory environment for smart contracts might not be on the execution of it, but the content of it.
Absolutely.
What those smart contracts are asking. For example, you could ask a question that would be violative of what an insurance department would consider outside the bounds for creating rate. So those types of environments, that's really probably going to be the more important part about how we regulate smart contracts within the insurance industry.
It's some other questions. Let's see. Can coins be converted to cash? Sure. The question is when, and it really comes down to the value of that coin, which is, of course, the faith of the people who have it. And what they see as the value. So you see Bitcoin fluctuate like crazy based on literally public perception. It has nothing to do with the price of gold, or anything like that. So yes, you can convert it to cash. Some of them may convert to nothing.
Exactly. He might have wished you hadn't asked the question at the end. And then from Liberty Mutual, we had a question around the subrogation blockchain application.
Yeah.
Those business-to-business transactions are really some of the first places we're starting to see the emergence and use of blockchain within the insurance environment. In other words, the ability for companies to share information that will take away frictional cost in how they transact with each other. Subrogation is an excellent example of that, right? You're talking about the ability to determine liability and share in a very seamless way the payment of that claim, and being able to rely upon others' insurance in that process. So that's a great example.
Right, and being able to work around a particular policy and claim as a carrier without exposing your entire book of business and all the details around it, which would obviously have a competitive risk. So you want to be able to establish a contract that allows only the visibility and the action around that particular claim for only the people that need to be involved in it.
Right, but we should also be aware that not just the business-to-business interaction becomes important, the business-to-regulator interaction is also going to be a very key component of the blockchain as we move forward in the insurance industry. How we interact with our regulator, which is something that you're responsible for generally as a compliance person inside your company, is going to be very important in the blockchain world. And we're not just talking about our ability to, file reports and things like that. It's given true transparency into this data, into our ecosystem, so that so good policy can be made around moving forward. It's very difficult for the regulator to approve things that they can't see and understand.
Right.
So this is an incredible tool to allow us to move forward in our industry.
Creating sandboxes of particular coverages and making sure that a new product or an innovative product doesn't go off the rails or create any kind of systemic risk. It can be only for particular things, and again, very defined, clear rules with real-time insights instead of waiting for a quarter or a year potentially.
Yeah. So we're here at the end, and we want to tell you, if you have any questions that you didn't bring up here, we have our information listed. Truman, you want to go to the screen where we have our stuff?
Yep.
So that you can contact us directly. We're happy to answer any questions. We will be reposting this video so that if you had to drop off at some point, hopefully you will come back and take a look and see us.
Oh yeah, and we'll make the slides available as well. I think there'll be an email going out to everybody that's registered following shortly after the event, so you can download the slides and watch the video as much as you want.
Yeah. Again, thank you so much to the AICP Mid-Atlantic group to allow us to present this blockchain webinar to you today. We hope that it was informative. We at AAIS wish you all the advantages in looking at adoption of blockchain, and we're here as your member-focused advisory organization to offer support to our industry in the adoption of blockchain. Thank you.
Thank you.